mortgage rate on a 30-year mortgage in the U.S. rose for the second week in a row to its highest level since mid-July. These higher mortgage rates and rising home prices are keeping homeownership out of reach for many would-be home buyers. But what is in store for 2025? Kelly O'Grady is a CBS News MoneyWatch correspondent joining us live this morning. Thanks so much for being with us.
Great to be with you.
Okay, first of all, what's keeping mortgage rates so high despite recent rate cuts? We just saw this one tick up the other day and I went, what is going on here?
I know. So it's really an interesting phenomenon because you would think that mortgage rates would fluctuate with the interest rate cuts that we're getting. In fact, mortgage rates are tied to the 30-year Treasury yield, and that really moves with where investors think inflation and rate cuts are going. And so while we did get that rate cut from the Federal Reserve last week, we also got messaging from Chair Jerome Powell that we aren't going to get as many interest rate cuts in 2025. And there's this fear that inflation is stickier than expected. And so that's why you're seeing mortgage rates tick up. It's a longer term rate versus that benchmark interest rate that's more short term. And so investors think, okay, we are not getting all of the cuts that we were expecting. And then the mortgage rate goes higher.
I'm so glad there's someone like you who can explain all this because it's like none of it quite makes sense to me. Well, I think home buyers too, you know, people are looking at it. If you already own a home, you don't want to sell because you have such a low interest rate. If you are somebody who wants to buy a home, you're going, I really need the interest rate to come down. When do you think home buyers could feel some relief?
So I can tell you I'm one of them that's looking for the first time home and is wondering that exact same thing. Unfortunately, I don't think that we are going to see rates go much lower than that 6 to 7% mark in 2025. We would have to see some really, really massive changes when it comes to inflation and the interest rate outlook. Something like a pandemic. That's why we saw interest rates go so low, because the Federal Reserve did keep cutting rates to try and keep the economy going during that time. And no one wants a pandemic, right? So I don't think that you're going to see mortgage rates go down as much as folks who are having a 3% mortgage. You know, they don't want to trade up. However, the best advice that I have been given in my home search from home industry experts are marry the house and date the rate. You can always refinance in the future, but if you find that house that you love, you want to pounce on it.
Well, that's what I was just going to ask you, because it does seem like that was something we did. You know, a lot of people got into homes right before, you know, and then we had the housing crisis. I'm thinking like 2007, 2008, right? And then everybody refinanced as things went lower and there was so much inventory on the market. Is that a good idea? I like the advice, but, you know, in the back of your mind, it's like, well, do I really want to take the dive in?
Well, right. I mean, don't get into a mortgage 30-year fixed rate that is not going to be sustainable if you aren't able to refinance, you know, within a couple of months or a year. But we aren't seeing the inventory come onto the market that we've been hoping for. I mean, that's why housing prices are so high. We have people who are sitting on those 3% mortgages and they're saying, I just don't want to take the leap right now. At some point, they're going to have to. We do have millions and millions of Americans that are kind of reaching that retirement age. They're thinking about trading down because the kids are out of the house, and we will see supply come back on the market. So if we do start to see prices come down and you are looking at a mortgage rate that's a bit higher than you might want, I do think that is the good opportunity to marry the house and then refinance, date the rate, you know, and refinance at a later date.
All right. Well, I guess we all have to have a little patience too. Kelly, thank you so much for being with us. Appreciate it.
Of course.